Hi, this is Bruce at Turnaround Stock Investing. I want to take a few moments and explain more about the methodology of why we cut our losses despite doing an enormous amount of research. Like other value investors, I will spend 10 to 20 to 30 hours doing research on a company. Yet, I will sell a position when the technicals deteriorate. And many people shake their heads and can't understand why that is. And I guess part of the reason is that I've been doing this a long time and I've seen what works and what doesn't work. You're looking right now at an article that appeared in the Wall Street Journal on November 4th about activists that try to put new board members on Cliff and throw out the existing management. Through all fundamental analysis, it appears that they were 100% correct. And I will take you briefly through their presentation where they outlined how horrible the management was performing. But the point I want to try to make is that here you had brilliant businessmen, very seasoned investors who invested a tremendous $100 million, I believe, maybe more, in Cliff stock on the belief that putting in new management would allow them to turn the company. Unfortunately, the price of iron ore declined, negating all of their abilities to take costs out or sell assets. At the end of the article, you can see right here, one of the principals of Casablanca that initiated the proxy fight says, "Cliff is a perfectly well-run humming machine," he said, "but you're in a commodities business. There's just nothing you can do about it." And that's the point I would like to make to listeners is that it doesn't matter whether you're in a commodity business or you're in a semiconductor business or the industry's turning down or it's a micro problem. You never know for sure. You have to remember we are always outside investors. Having turned around companies myself and operated companies, I know that many management teams are like deers in the headlights. Just because they're at the company does not mean that they know better than you what's going on. But as passive investors in these securities, we don't have to ride all the way down if it appears we're wrong. We can stop out and come back if we still believe in the story. And that gives us an advantage that other investors and managers don't have. We're now looking at a chart of Cleveland Cliffs. This is a 3-year chart, and there's a few things here that I'd like to point out. First of all, and we'll get into this as we explore more of technical analysis, but whenever you see a huge gap down, such as occurred here, that is a message to stay away. Especially if this occurs in the beginning of what you would consider a cyclical downturn, or if the company has just begun reporting earning disappointments after many, many years of success. And again, this is illustrated in my book, which is also available on this website. So let's take a look and see what's happening here. I believe around this time period is when the activist investors began to acquire shares. And again, you'll see this in relation to the long-term chart next. But the point I wanted to make here is the significance of our approach and bases. I'm a big believer that when bases forms like this, which you can see from March 2013 until October 2014, this is a very significant level. Tremendous amount of capital went in to buy stocks and absorb the shares being sold during this time period. And of course, this was Casablanca and other value investors that looked at Cliffs and said, this is a very good value if the activists can take control. However, as you can see, this base was broken eventually. And it's interesting, another thing that we'll talk about are gap downs. So the base broke and there was a gap down here. But the point I'm just trying to make is that when you see a base broken with significant volume, which was occurring all through this decline here, you want to pay attention and revisit the fundamentals. Had I owned this stock, I probably would have sold here. Again, Very smart investors. Casablanca, tremendous amount of experience, very well heeled. And they were wrong. This is business. This is life. Again, we can't beat ourselves up, but this occurs over and over in our search for 3, 5, 10 baggers. So the base was broken, and we can see the decline to the $7 arena, and it tried to stabilize again. Base broke here, then it rallied, etc. And then, as you can see, it made this step down process, tried to form a base here, and broke again. The point I'm trying to make is that we don't want to stay involved when significant bases are broken after a long period of time. Here is a much more longer term chart of Cliffs, and I think this is even better than the previous one, because we can begin to understand, why did Casablanca get involved? Where did they see the value? And of course, this stock in 2011 was $90 a share, and it had just continually fallen. No doubt this was due because iron ore prices were declining and the management was making horrible decisions. So as the stock approached this $20 area, where I believe Casablanca was acquiring from 20 to 15 to 25, at the time it made a lot of sense. However, we can see when this base was broken, you had a critical warning that something was going on. The stock had never based this long a period of time during the previous rise and falls, as you look at it over here. So another interesting thing when we're looking at charts, and we'll learn this later, is to look at the significance of the pattern compared to previous times when the stock was trading. So again, I want you to see that how easy it is for very smart investors with very well seasoned opinions to be wrong. Now, going back to this chart, Cleveland Cliffs, if you look at the price now, I believe it's $2, or actually maybe $1.50. It's $1.57. Had been on my watch list, and I was watching it because who knew if it was going to base, and that was possible. And I was watching. Now, interestingly enough, the bonds of the company were trading at 20, 15, 10 cents on the dollar, given their seniority in the capital structure. So that was another indication that there were problems ahead and that the equity is probably going to get wiped out. So again, it's a high risk, high return situation. Now, will I take this stock off of my watch list? No. Why is that? Circumstances can always change quickly. And if for some reason iron ore prices start to resume an upward trend, Cliff is very leveraged to that, and you could see a remarkable recovery. So we're going to keep an eye on the stock. Let's go take a look at a shorter term chart. So here's a shorter term chart of Cliffs, and as you can see, the downturn continues with new lower lows being made. It tried to form a base here at 225 and broke that. Now, does that mean that it's all over? Well, I'm certainly not going to be buying Cleveland Cliffs given the way it's trading at lower lows and there's no base. However, as you will learn in my stop and re-enter, even though we never owned this, it is possible that iron ore prices could rally. And I'm waiting to see, it's possible that Cliffs could start rising. Now, am I concerned that I would pay $2.50 a share and it was $1.50? No. If I see iron ore prices rise $10, $15, $20 a ton, which I don't believe is going to happen, but if it does happen, the circumstances of this company in a financial way can change dramatically. And when you see a stock, go back. Now, this is classified as resistance right here. If I saw this stock price move back above these levels of resistance, that's telling you something enormously important. So those are the things that I look for. Now, if Cliff didn't go bankrupt, it would just base out here, probably between $2 and $1.50. That's why it's on my watch list. I want to see if the stock just bases out. So I hope that you learned a little bit about this Cleveland Cliffs and why, despite the enormous amount of research you may do and your beliefs, you can always be wrong and the markets are right. and it pays at certain critical turning points to pay attention to the stock price. I look forward to seeing you in another video.